For all the drama of last week, the S&P 500 down 0.4%. Shaking off the drama again. Why?
Well, I think it's pretty straightforward, right, Jonathan? It's all about earnings. We had the best earnings quarter we've had in multiple years in the first quarter, and I think that allows equities to kind of stay relatively buoyant. But the bigger point is, what does it mean for the U.S. relative to the rest of the world?
Yeah.
And here I have what I call a 5-point investment program to deal with what I call Trump troubles, right? So Trump troubles lead to policy inertia, which in turn leads to weak growth, which in turn leads to questionable earnings, which means a poor risk reward for U.S. equities, which means focus on the rest of the world. And the story here is that if you look globally, the U.S. has gone from leading global equity markets since the bottom of the great financial crisis in 2009. Now the U.S. is lagging the rest of the world, and lagging significantly. To give you an illustration, the developed markets ex-U.S. are up 15% year to date. The emerging markets are up 18% year to date. The S&P is up 6%. So if you're a global asset allocator, if you're a multi-strategy, multi-asset, big portfolio, the real question is not why the S&P has held up so well.
Yeah.
The real question is the rest of the world starting to take the leadership baton away from U.S. equities? And that's a big deal because these moves tend to last for years, not quarters, not months, but 3 to 5 years is the average when you have a handoff from one like the U.S. to the rest of the world. That's the big call.
I want to pick up on something you mentioned, and we'll kind of strip back the big call. Policy inertia. Why is that a problem for U.S. equities? Because it hasn't been for the past 7 years.
Right, but what we saw with President Trump in his election was a big move up. And that was based, I don't believe, on the Trump trade. I've always believed it's the Republican sweep trade, which meant that with the Republicans controlling all facets of government, things could finally get done and we'd get out of that logjam that you spoke of. And look, we had the Federal Reserve for all those last 7 or 8 years providing money into the system. We now have the Fed stepping back. So the risk, as I see it in the U.S., is that you get policy inertia, so the growth doesn't come through, but at the same time, the Fed has already started to move. We've had 3 interest rate hikes. It's likely to have at least 1 or 2 more. And I think the risk is that we have policy inertia, Fed raising rates, earnings don't come through, and you have a U.S. market that is now expensive, certainly fully valued on any measure, expensive on some, in the rest of the world moving ahead that looks so much more attractive because it doesn't have the Trump troubles. Look, as the prior gentleman said, you're a D.C. person. We're going to have Comey, we're going to have Mueller, we're going to have these revelations for years. The average tenure of these special prosecutors is 3 years plus. So we are going to, this is going to be the focus for the U.S. for the next couple of years.